Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacino. How is everyone doing? Finally got a little pullback today. Very little pullback. We got the FOMC minutes, so let's get started. How is everyone doing? Good afternoon, Davey, Sashi. Waiting for this kind of pullback for the next 6 weeks, meaning you think this is the start of the pullback for the next 6 weeks, or what? Good afternoon, Patrick. Good evening, Anissa. Hey, John. Glad to have you all here. And by the way, for anybody new here, please do consider subscribing, ringing that bell and hitting the like button. Longer term subscribers, please come back, leave some comments, and like the videos. Let's see. Hey, John, is Apple form a double top? We can peek on Apple. Yes, so you think this is a start. Remember, we got OpX on Friday. It's a pretty decent one. Last month was pretty pathetic in terms of the notional value expiring. This one is pretty decent. So, and 4,300 is a key pinpoint. Tomorrow, let's just go over some of the stuff and then we'll look around, see what's going on. This is going to be a little shorter live stream. Continuing jobless claims, 1438 forecast. Remember, Patrick, what's the magic number, Patrick? 1456K. Yeah, I know he'll put it in there. So we'll see with the Philadelphia Fed manufacturing index if it's still in contraction. But I'm focused on continuing jobless claims just because of the reliable indicator for the tip two and well, in my mind, a more official recession. And then I'm also going to be paying attention to the consumer board leading index to see if that is still dropping or see if we get a bounce in that. That's going to be interesting. But more of the market will be pivoting off of Fed speaks tomorrow. George and Kashikari are both speaking. Kashikari flipping from Uber Dove to Uber Hawk, I guess you'd call it. Apple, the only major thing that was up in the mega caps. Everything else, oil stocks after their big sell-off last few days, a little bounce in oil, but nothing substantial. So you got a lot of profit taking across the board. You know, this wasn't a big pullback. At least volume was kicking in today. At least we had some volume. Breadth was a little better. By the way, big reversal today. Now favoring after the FOMC minutes, just favoring the 50 basis point instead of the 75 basis point. And we still are in positive gamma territory. Remember, anything above 42.19 is positive. Cisco beat and was a big gap up. That's the one I was interested in, especially with that weekly double bottom that was in play. So that's what we're looking at there. Let's see. Hey, King AP, good to have you here. Thank you for being here. SPY head and shoulder on a 104-hour chart. We can take a look at that. With the Jackson Hole and more Fed talk, I think we're going to see choppy action. I'm prepared to more choppier action going in for the next couple days at least. Daily cycles rolling over. So again, that could mean weekly still pinned at the top. I'm more starting to watch for that big starting a weekly move possibly next week with daily cycles rolling over. But remember, that could be choppy to slightly down. 42.8 is where we are looking around that area where we're looking to close the day. But that's within, with back and forth price action. The S&P 500 still not connecting with the rotation zone again, but remember, that's going to keep slightly rising. Even if we dip and rally, I'm not looking for major momentum over the next couple of days going into into expiration Friday, but you got to be prepared with everything. Nasdaq finally reconnecting with the rotation zone. Dow a long way off in the rotation zone, so the Dow still has some more work to do. Russell reconnecting. So the overall, the Nasdaq, which didn't even hit its 200, reconnected pretty quickly, and the Russell that was the thing that showed the most weakness today, down 153 basis points so far. Close still not in, but that's roughly where we will be. So let's go back and take a look at the S&P. Get to some more questions first. On the road today, left the binder at home. You should have your binder with you at all points, Patrick. It doesn't matter. The number's 1456. That's the number we'll be watching tomorrow. Good afternoon. Healthy pullback, long-term buy signal still in place. That would not flip until at least weekly. And if come on. Oh, fantastic. Fantastic. You know, it's got to yeah, there's no flip, and it have to get, as I said, it would have to get below in order to flip with this week. It would have to get a close below yesterday's low. So you know we're in no. I mean, you'd need a massive sell-off over the next 2 days below 4110 approximately. So there's no risk in that flipping. And as I said, we should, you know, at least we're getting the pause bar in there. Let's take a look at these shorter terms. Let's see, there's a question here. S&P head and shoulder on the 1 hour chart. That's because you got this double thing. You can try to look at it on a 4 hour. Yeah, you got a double shoulder. I wouldn't trade it as that. I mean, you're still gonna have virtually the same trigger point, and no, no. It doesn't work. It's too structurally flawed. Let's just take a look at the other quick analysis to see where we're sitting. This has turned into sort of a choppier mess. Sorry, guys, I'm dealing with a bad migraine too, so I just wanted to make sure we get some of this analysis out of the way. There we go. Got everything fixed up. All right. So, overnight, if we start breaking down my key levels about 42, 47, 42.50. If we break below that, I'm back to 42.24, which is a 50% up move. Still, I'm expecting any dips to still get bought, especially we're in positive gamma territory and we have that magnet with 4,300. So rallies, unless it can really get a strong rally on, I'm expecting rallies to get sold, especially above 43.20, and dips to get bought. So if we did come down to this 42.47, I'd be looking for a bounce back with somewhat of a magnet around this area. You got 4 hour cycles at the bottom, daily cycles at the top, weekly cycles at the top, and daily cycles coming down. That can be also come off by choppy to potentially downside price action. If we get a close below about 42.42, then I will start getting a little more interested in a stronger pullback. But without that happening, nothing going on there. And to the upside, it's already hit the 200 once. If we did get the stronger bounce, again, that's coming around 43.20, and it normally takes a couple hits to chip away at a 200, especially at the S&P. So I'd be looking for a fair amount of selling pressure up there on any rallies. Again, aren't a lot of great patterns today. There's some volatility with the FOMC minutes. You know, them stating they think there's a risk of over tightening. And that was taken again dovishly, but then we got the sell-off. So you see the back and forth price action here. So as long as you're still within 48.305 to 42.54 overnight, I'm expecting chop. Hey, George, for a while it was looking like the Fed minutes were going to cause a rally. That was because of some of the words could be taken as a dovish price action. I think everybody's still looking for a dovish Fed, a pause or whatever you want to use, pause or pivot, which, you know, your inflation's running 8.5%, even if inflation was running 7%. There risks to they don't have a mandate for, causing the market harm. And the liquidity that's been brought in off this rally since the July meeting is loosened up financial conditions massively. I mean, this has been loosened up tremendously, so I don't see them really doing anything else. But that's what the market's still trading off of, that little hope that there's a positive pivot because they want the free juice back. Nasdaq coming back down to that major area down here, this 13,400. At this point, and we bounced up off of that 13,833, and then we went tested it again after the markets, but it could not hold. So bullish mode is still this 13,583 area. If you want to try to get a front run, it'd be about 13,556. I would not recommend that overnight. That would be right around here. So you have that little cluster of resistance that we have to get through. And key support is still, in your short-term basis, you're looking at about 13.5. And then if we did sell off, there's pretty substantial support coming in at 13,990 to 13.4. So on any dip, that's where I'm looking for a pretty substantial bottoming play. I can't say substantial bottoming play. I mean, at least some buying pressure in there. That's the major resistance becoming support with the 50 period on the 4-hour and the daily rotation zone. Dow still hold. This is what I was interested in. Remember, I talked about this morning. We pulled back, tested the 200, and substantial close above it still. So Dow holding up. So unless we break these yesterday's and today's low area, which is not a double bottom, it's just two bottoms in the same vicinity. The only way I start watching for that pullback to the daily rotation zone is on a break of 33,806. I'm going to bump this level down there because that's the key area now. That's pretty key. Then if we get below there, because that would be below the 4-hour rotation zone, then I start watching for the Dow to get a slightly bigger pullback on to the upside. Still, your major resistance is a 62.5, which I'm still watching for the daily close on 34,134. Russell. Oh, by the way, the Dow, we looks like we're getting that pausing bar with the wedge. So with this is now, because this is a pausing bar, you got this is a defining point for the wedge. So we can now, as we were talking about, it could not do that yesterday. So this is a continuation, sort of a lesson from yesterday. So here's your wedging up, and there's the downside break target. Again, I'm sorry for being a little under the weather today. Russell hitting that rotation zone unless we can get another push below about 1985. Remember, I was watching 1988, 1989, a little dip below that, and then bounce off of there. You have the low also with yesterday, the low area. So unless we can really start breaking below this area, not looking for more of a pullback just yet. Get the 4-hour rotation zone tipping over, but we could stay in consolidation a little more. If we do break below that, the next key area is back down about 1950. DAX, pretty decent pullback. I'll have to do some more analysis on this. My next support level is about 13,540. Resistance coming in now about 13,770. Notes. Broke that key level. I'm now watching for more of a return over the next couple days to 118.05 before putting in a potential bottoming pattern again. Could not hold the 118.29. Didn't break it convincingly yet. And again, by the way, this is nowhere near changing this pattern. This is where I'm being very patient watching for this pullback because this is a much longer term bottoming pattern. So watching for that pullback still in there. Crude, little rally, but nothing triggered, nothing to really write home about. Still would be an aggressive buy above yesterday's high. Not much going on there. Dollar index still, we're caught between these two little key areas. Still, you got the 4-hour double top in place. So short term pullback up low 106.18, 105.85, 105.67, 105.52. To the upside, we start getting above this 106.83. I start playing for 107.41. VIX, this was a very weak sauce move. Still the only thing that's going to interest me with more substantial downside pullback, especially if this would grind up and then this triggers, this double bottom triggers. We could get some more reestablishing put positions and bidding up volatility starting next week. That's what I will keep an eye on. But today was an outside day, but pretty much not much. Not much. Bitcoin pullback still same area, 22,609, actually closing below the daily rotation zone, which is the first time closing back that since July 25th. But watching to see if this continues to break this down area right here with the channel bottom. Tesla, again, you had the little gap fill, but still holding the 1-hour rotation zone, filling actually two gaps today with the back and forth price action. We start getting back below 899, then I'm going to target 864. We hold here and rotate back up again, 941, then 953. Apple finally tapping the 87.5. Remember, we closed above the 62.5. And what's the next target? The 87.5 for the statistical probabilities. So that statistically is done. Does that mean it can't keep going up? No, it can keep going up, but that's where it sits, although in massively overbought condition. So we had that double. We had the statistical move to that 87.5. So I'm going to be watching for a more substantial topping pattern. Also with the weekly, extremely overbought. Weekly cycles at the top. Remember, it's making up 7% of the index. So if we start getting some pressure in Apple, it could lead to some more substantial downside pullbacks. But I'm still first thing watching for it to reconnect with the daily rotation zone. When using the harmonic, if a ticker reaches the 75, does it automatically pull back or can go straight to 100? No, there's no automatic pullback level. 75, if you're looking for doubles, it starts qualifying it for a double. Statistically, a close below a 62.5 targets the 87.5 to 100. So if you're looking at the 75 and it keeps going, the next logical target is, because it's above the 62, is the 87.5. But anywhere between 87.5 and 100 is another potential stopping area. If Apple's going to do another all-time high, I'd expect at least a minor pullback first. It's extremely overbought. And stuff's getting chased higher into this, so I'll start watching for the pullback play and then the secondary reaction after the pullback play. So that's where we sit with Apple. What about gold right now? Gold that can't get anything going. Gold finished the little double pattern. It's almost turning into a could be turning into a head and shoulders pattern. If we start breaking below 117.70, I'm watching for the pullback between the 50 and the 62.5, and a potential gap fill then. But it needs to. There's no strong bottoming pattern, so it's still trading around a core position. Next key area is 1770. You can see how it trades between the harmonics and couldn't rotate back up, even get to the 200 yet. Interesting, daily cycles getting the bottom, but weekly cycles are at the top. That's why now I'm watching for the bigger pullback again. So if you're bullish, I'd be sitting on the hands more so. Let's just take a look at a couple other stocks. Oh, Cisco, I wanted to call it that. And then we'll take a look at, then I'm done for the day. Cisco, essentially, with the earnings, hit the second target. Here was your weekly double, which triggered last week, gave a little pullback entry so far this week, and now has already hit the target. I'm interested in this target with the 200. Was the first thing, is with the weekly cycles at the top. But that was what I was watching for with that little thing. So you'd have to use a much tighter stop, but a shorter term play to this breakdown area, the gap fill, the 50% harmonic, and the double target, which is essentially reached after hours with the earnings play. Just wanted to point that out. NFE. Well, New Fortress Energy looking like it's putting a topping pattern in. This, even on a rally, as long as it doesn't take out this could actually turn into a more substantial sort of head and shoulders top. I'd be watching for the break below 56.50. You got a lot of clear path to the downside. And this has gone on quite a run. And daily cycles are rolling over. So from a long perspective, and after spiking through this harmonic yesterday, I'd be watching for a more substantial topping pattern and a pullback, especially closer to this prior significant breakout zone. With very overextended, everything's pinned to the top. I'd be looking for a pullback at least, and I'd be patient on. I would not be looking for aggressive buys in this, at least until you get the daily cycles to the bottom. BP. Right there, it does qualify. You're still full gap. It'll be interesting because you haven't been able to fill the gap up just yet. And you should statistically still try to get to that 87.5 from this little pullback move. But it's looking like more, especially with oil where it is, I'd be watching for more limited upside and then the potential downside trigger, at least in the short term, for this potential double. Now you're still in this overall massive bottoming pattern that could not even get to the first target. And that double would just take you back to the 50 week. So I would not be aggressively chasing it here unless, I'm going to caveat that, if you do get a close, so you get a break above this high from the 12th, especially if oil gets a little stronger, you get a break above this high from the 12th, you do have a big gap play in here. That could be played intraday, and then if it rolls into a close above there, then there could be an upside play, and I'd use the shorter term harmonics both ways to do stop reductions and take partial profits. So this would be a major target area, this breakdown zone. You have this gap to be filled and a 3250 harmonic. And then for shorter term stuff, I'd be using the reverse harmonics as long as this double does not trigger. And then these would be stop raise areas, 3188, 3206, especially 3206. That's how I dissect BP at the moment. No, they're still underwater. They're still holding. They're still holding. The pullback SP. What are you talking? I don't even understand that comment. The pullback, I mean, this was just a minor pullback so far. It moved back, well, right now it looks like the official close is going to be 62 basis points in the S&P. So that is a little pullback. It's not a substantial one. We don't have a substantial topping pattern in yet. There's still, for everybody who's trying to call a top off of this is a little pullback. We still have some major support with a daily rising rotation zone to get through. And we don't have statistically a high probability topping pattern just yet. Now, we are statistically in a high probability topping area between the 50 and the 62.5 with that 200 that was hit. That's why I'm watching after OpEx for a more substantial pattern to form. With that, thanks for being here. Sorry for the shorter live stream today. I'll be back hopefully tomorrow morning. And I'll talk to everyone there. Everyone then. Talk to you later. Bye for now.